Arvind Shanmugam, CEO of Alternatives at Sanlam Investments. Welcome to our educational series on alternative investing.
Hello, I'm John Seymour and I'm Head of Private Equity at Sanlam Investments. Private equity is a process of investing where we acquire shares in private businesses directly. Investors often access these investments through a fund. Funds are typically structured as partnerships and require a long-term mindset, with capital often locked up for between 5 and 7 years. The most important thing about private equity is that it's a partnership with the management team. We are equally incentivized to create value with us. Our assessment of management is a critical part of our due diligence, and in fact, in many cases, is more critical than assessing the company's economic moats. After we've invested, we work very closely with the management team. The benefits of private equity are exactly that. It is private. We do not essentially have to worry about quarter-to-quarter earnings. We can formulate a strategy for the very long term and allow management to get on with it and execute the strategy, as opposed to being monitored by our shareholders on a quarter-to-quarter basis, which we think often drives the wrong behavior. In their 2019 Global Private Equity Report, Bain confirmed that the returns generated for multiple periods ending in 2019 outperformed listed markets and were in fact less volatile. Typical investors have a long-term time horizon, are looking for a premium return to public markets, and are also looking to diversify their risk in terms of underlying portfolios. The investors we typically have would be pension funds, multilateral organizations, insurance companies, and certain high net worth individuals. Typically, the investment in private equity delivers a better return, I think, because of two reasons. One, we are able to acquire these businesses at a more attractive multiple very often, given the stage that they're at and also the fact that they may be smaller at that point in time. We then, through adding value, get them to a stage where we can actually exit the investment on obviously a better level of earnings and after good cash flow generation, but on a more reasonable multiple than entry. From a social returns point of view, the fact that we have a preference for growth capital often means that we create jobs through our investment, and throughout the value chain of the company, we will see its suppliers and customers grow because of our business growing. Private equity is a particularly active strategy, both in terms of assessing a company up front, but then more importantly, after purchasing our investment, we get very deeply involved with management in terms of executing the strategy, which would realize value for us and create value for all investors. So globally, private equity has grown significantly and is preferred by many investors over public markets. In South Africa, we think it's an equally attractive opportunity, particularly at this point in time.